Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today is Friday, and I decided I'd go ahead and try to get my second video in a little bit early. This tweet I liked from the Joker, and he's one of the few chart guys that I follow. And by the way, let me look at my phone here so as not to mess anything up here. It looks like we've got a $1.11 or so XRP. Things have been kind of flat the last few days, but I believe things are about to get interesting. That's just what I think. But he says XRP was at 30 cents today, $1. Okay, soon. Wait, I'm sorry. This is from August 26th, which is yesterday. XRP was at 30 cents today, $1. Soon, I will tweet XRP was at $1 today, $14. And he's showing a tweet that he did in 2020. How can you be bearish on XRP? Buying XRP now is like buying Bitcoin at $8,000. You know my targets for XRP, but it's getting ready to retest all-time high sooner than what you think. Remember that guy capitulated its XRP bags at lows. What was his name again? Exactly. The heroes are going to be the ones that hung in there, folks. I agree. Okay, Mac Attack had put this out. China's central bank says Bitcoin has no actual value. And this is from, that article is written from a tweet, as many of them often are. People's Bank of China, virtual currencies such as Bitcoin are not legal tender and have no actual value support. Whoever that person's name is that I would butcher, Deputy Director of Financial Consumer Rights Protection Bureau of People's Bank of China said today, we remind people once again that virtual currencies such as Bitcoin are not legal tender and have no actual value support. Virtual currency related transactions are pure investment speculation, and the public should increase their risk awareness, consciously stay away from them, and protect their pockets. Okay, now that's from China. I believe that Bitcoin is going to have value as a store of value. I say all the time that proof of work doesn't work. Now, I believe the way this proof of work story ends, I believe somebody is going to come out of nowhere and say, "Oh, remember those quantum computers that you thought were 20 years into the future? We happen to have them, and we can mine Bitcoin instantly." I believe somebody's going to come along and pull that rabbit out of the hat, and then this game is over. Now, that doesn't mean it's over. It could be a good guy that comes out and says that. They mine it all, and then you've got your Bitcoin for the rest of time. I don't know how that would come about, or whether it would just smoke the price at once. I don't know how that would work. But I think that there's a day coming, if they don't figure out a workaround, that's going to happen. Okay, I wanted to show you this. To me, Charles Hoskinson is not just one of the more honorable people in the crypto space, but he's also one of the smartest. And here, I went back and found, this is a video from back in 2017 where this was when the ICOs were really happening left and right. And you have to understand about Charles Hoskinson, he was one of the creators of Ethereum, and he left because he didn't agree with the way they were going to fundraise, the way they did that pre-sale. My understanding is that he did not accept any of the Ethereum tokens. Now, you have to ask yourself a question. What kind of a quality guy would you have to be to walk away from that? I mean, he would have literally made millions from it, okay? So that's who you're talking about. And I've met this guy twice, thoroughly impressed with him. And he's the founder of Cardano. And I think that's part of the reason you're seeing a Cardano price go up. Watch what he says.
You say, interestingly, this is a ticking time bomb.
Ticking time bomb.
So the fundamental problem with ICOs is, while they're magical because they create liquidity and they allow people who have never been able to raise capital before to do so, they have caused some people to forget that basic business principles, due diligence, these types of things don't go away because we have new technology. It reminds me of the .com.
By the way, as long as he's calling it a ticking time bomb, who created the bomb? Ethereum created the bomb. All the ICOs that they're talking about in this segment were created on Ethereum. Why did the SEC not go after the creators of the bomb?
And bust in a certain respect, where they say, oh, it's a new technology and paradigm, so we don't really need to make profit or, care about governance or these types of things. So I see a lot of similarities in this respect, and I get a little worried that people are raising a bit too much too quickly, and they haven't thought about the implications or consequences of it.
Implications being eventually regulators catch on to this?
Well, that could be one, but the other is just too much money can be just as bad as having too little money. You don't execute any faster, but you now have much stronger expectations and a much more aggressive group of investors. The other side of it is that salaries go up, your negotiation leverage goes down with people. Everybody knows you have 200 million, so maybe I get 25,000 a month or something like that. As for regulators, it is certainly a concern. You have things like the SEC, you have FinCEN, you have the IRS, and every single one of them have an opinion about what these things ought to be, and at some point they have to make that opinion public and start enforcement actions in some respect.
And does that come to haunt people? The ICOs that we've already seen come out, if regulation does come in post your ICO, who does that affect? The investor base or indeed the company that raised the money to begin with?
Both, because from the investor base side, the tokens, if they're securities, may be delisted, so they lose liquidity. So these tokens that used to have a lot of value will lose the value on trading, and also they become difficult to sell. Then on the business side, they may lose their bank accounts, they might face some sort of civil issue or criminal issue. It just depends on what representations were made, how much capital they raised, where they're at, the people they raised the capital from. It's kind of a snowflake situation.
The people they raise the capital from, who are the investors? I mean, of course, the joy of blockchain is that you can't tell, but right. Is it generally those that have won out with the early Bitcoin and Ethereum successes?
Well, that's one of the problems. They're not doing KYC and AML, so you actually don't know who these people are or where the money's coming from.
You say...
Okay, I thought that was a very interesting clip. Now, James Phelan had put this out yesterday. The court has granted the motion for extension of time. The extension for filing pre-motion letters regarding summary judgment has been granted, but no due date has been set pending resolution of the motions to strike and dismiss. There was no separate written order of the granting motions. Let me see if I can find the most interesting part of this. If you want to see it in the court's file, you can, Okay, so this is a lot of that procedural stuff that kind of probably bores you and me, but he's retweeting this. Parties move jointly for brief extension of fact discovery deadline to take Garlinghouse and Larson depositions and to extend. So that's the interesting part to me, is that I guess they've got to do Chris and Brad's depositions. Now, something that I ran across, I wanted to make sure everybody was aware of. Remember, Bill Hinman gave his Ethereum speech on June 14th of 2018, okay? This happened 1 month before that. 1 month later, he gave his speech, okay? And what this is an article that was in the Wall Street Journal, world's second most valuable cryptocurrency under regulatory scrutiny. And they were talking about how the CFTC and the SEC were going to get together and really talk about Ethereum. And then 1 month later, we are supposed to believe that out of nowhere, Bill Hinman goes to a microphone for the SEC, but it's just his personal opinion, and announces that, in his personal opinion, Ethereum's not a security because it's decentralized now. You're telling, are you buying that? Because it's Friday, and my igloo in South Georgia is still for sale. It's unmelted, and it'll probably melt. Probably wouldn't even take 24 hours. It'd probably take, as hot as it's been recently, I've been sweating like crazy. It'd probably melt in an hour, if that, okay? But it's a great igloo in the meantime if you want to buy it, okay? So if you're buying what they're selling, then that's what you can have. All right, now, John Deaton had covered this, and this is interesting. This person here, Crypto Counselor, had brought this video to everyone's attention. And I wanted to, what it is you've got Amy Starr, who's the chief of the Office of the Capital Markets Trends and Division of Corporate Finance at the SEC. So Bill Hinman was her boss. Dorothy DeWitt, General Counsel, Business Lines and Markets from Coinbase. Well, I'm going to go back to what John Deaton says here, but first I want to show you Brad Combs from Digital Perspectives, who is a researcher and wild speculator like myself. He put together this clip from that video, and then I'm going to go give you John Deaton's thoughts.
Introduce Amy Starr to my left. She is chief of the Office of Capital Market Trends within Corporate Finance Division of the SEC.
Sure. Thank you very much.
So this is Amy Starr from the SEC who works for Bill Hinman speaking.
Yes, I do always have to have the disclaimer. Whatever I say represents just my own views and do not represent the views of members of the staff or the commission.
And Dorothy DeWitt, General Counsel for Business Lines and Markets at Coinbase.
Tammy, you asked how we evolved our approach based on regulatory feedback, and a lot of it is with the SEC, but we're also a bit licensee and have a regulated custodial trust. I think in general, we found as an exchange that we needed to analyze tokens to ensure that they're not securities before we list them in the U.S., obviously, because they're not securities before we list them in the U.S., obviously, because if they were, we would be violating the 34 Act, among other things. And so we found over time that we were looking at each token one by one. It's very facts and circumstances. And although the law has, or the SEC's approach and the law have developed a bit over time, it's still a fairly murky area. So we developed a framework, and we love that word. The SEC came out with a framework with the same word later, that basically went through the Halley analysis and case law and enforcement actions as they came through and developed a list of potential question or actual questions, and with some weighting alongside that to help us have a much more robust, scalable, and what we hope to be ultimately defensible framework in determining whether to list digital assets in the United States under the consistent with the federal securities laws as a part of their lifestyle management. So we did that, and we feel like we've done as robust a job as we can to work within a quickly evolving industry and identify tokens that we can list. And using that framework, we have also rejected tokens.
So the Brad Combs points out here, Amy Starr's on the stage. She's from the SEC, and she's giving guidance. XRP, of course, it's her personal opinion, right? XRP is listed on Coinbase the same year. And so the whole crux of the SEC Ripple case is this fair notice defense, where Ripple's saying we didn't have fair notice that this was a security. And the whole point is that because of this kind of stuff, here you got this woman on stage there, and the SEC the same year, obviously someone gave Coinbase the signal that it was okay to list XRP, and so that's, I would think that's notice enough that, oh, it must be okay then. So let's go back to John Deaton's thoughts. He said this is significant evidence, and even more significant evidence in XRP holders' case. This person does a great job summarizing, and then he goes on. Amy Starr is likely one of the fact witnesses from the SEC that Ripple elected to depose. In addition to William Hinman, her name was brought up in the Hinman deposition. In the Consensus 2019 video, she states, we have people that really understand the technology, states that the SEC, we develop an expertise. Why is this all significant? XRP was internationally recognized as a non-security. 2, the SEC was an expert and understood the blockchain technology so well, yet it chose to not bring a case against Ripple or XRP for 7.5 years, even though it aggressively pursued others between 2017 and 2019. This makes the decision to file the case on Clayton's last day even more arbitrary, capricious, and suspicious. The other huge piece of evidence are the statements by Coinbase's general counsel, Dorothy DeWitt. She made these comments 3 months after Coinbase listed XRP. Most significant is that we know Coinbase met with the SEC in early 2019 to specifically discuss Coinbase's decision to list XRP. It is very likely that Coinbase met with Amy Starr, who is a senior person in the division with oversight in novel securities, later joined FinHub unit at the SEC. Bottom line, Amy Starr worked for Hinman in the division of corporate finance. She apparently set up the Hinman meeting with Joe Lubin, I didn't know that, co-founder of Ethereum and founder of Consensus. Dorothy DeWitt, a general counsel at Coinbase, cited that Coinbase worked closely with the SEC and that Coinbase would analyze each token. Man, what a great thread by John Deaton. I'm not going to go through the rest of it. You can do that on your own time. But I mean, wow. This guy, I would hate to be the SEC with this guy coming for me. Wow. Smart dude. Now, let's see. I want to remind everybody here that about purevpn. I'm going to put it at the top of the description of this video. Look, the market's in a lull state right now, but all indications are that there's a lot of things that are going to be blasting off before this bull run is over. And so when that happens, the bad guys come out of the woodworks. They come for your assets. And so you need to have an antivirus software, and you need to have a virtual private network so that you can surf anonymously. I've got one myself. Okay. This will be at the top of the description of this video. They're doing a special. They're doing like 2 years for $2.45 a month. Pretty cheap, or inexpensive is a better word. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family that if they don't have a virtual private network, they are exposed. Have a good week.